Welcome to this month's XPS Investment Update, keeping you informed of key developments and how they may affect your scheme.
February was a tough month for gilts, with fixed and real yields rising sharply, but overall this was positive for pension scheme funding.
The Bank of England increased the bank rate by 0.5% to 4% at the start of February in pursuit of controlling inflation. UK CPI fell modestly for the third consecutive month in the first 12 months to January, down 0.4% on the previous month, but remaining in double figures at 10.1%. However, further inflationary headwinds are still anticipated, with food inflation rising once again in February. Russia's Deputy Prime Minister, Alexander Novak, announced that Russia will cut oil production by 500,000 barrels per day in direct retaliation to Western countries capping how much they will pay for Russian oil and refined products. Inflation in the US also fell for a third consecutive month, but the deceleration was slower than hoped, falling by just 0.1% to 6.4%. The US Federal Reserve announced an increase in interest rates of 0.25% at the start of February, with the European Central Bank increasing rates by 0.5%. Markets had previously priced in 2 US interest rate cuts before the end of 2023, but now suggest that no cuts are expected for the remainder of the year. In Asia, Kazuo Ueda was named as the next governor of the Bank of Japan. The world's third largest economy has been struggling with 40-year high inflation and slower than expected economic growth since the pandemic. Chinese manufacturing expanded at the fastest rate in over a decade in February, in an early indication that the world's second largest economy was beginning to shake off the impact of its zero COVID policy. UK equities posted strong returns over the month as investors speculated that a weakening pound would make UK exports more competitive in international markets. On the other hand, global and emerging market equities posted negative returns to sterling investors. Corporate bonds, fixed gilts and index-linked gilts all posted negative returns. Expectations for changes in future inflation remained broadly unchanged. Aggregate UK DB pension scheme funding on a low-risk basis improved in February. Liabilities fell by more than assets during the month, leading to aggregate funding gains. That's it for this month's update. Please contact us with any further questions.